Hi guys, thanks for tuning in to the first episode of the CRE Deal. Today we're joined by Mr. Bob Knakal. Bob is globally recognised as the greatest commercial real estate agent of modern times, selling the highest number of buildings in Manhattan. In the 1980s, at the age of 25, Bob started Massey Knakal Real Estate, which went on to become the leading commercial real estate brokerage firm in New York from the years 2001 to 2014. He sold the business in 2014 for a reported $100 million to Cushman Wakefield. To put things into perspective, the best performing agents in Melbourne typically write between $3 to $5 million per annum in fees. Bob was doing $20 million plus whilst owning his own business. In today's episode, we talk with Bob on his background, his projections for the future, and some synergies that are occurring between New York and Melbourne. Thanks a lot for tuning in. So Bob, thanks a lot for joining us this morning and this evening where you are in New York. It's just after 6 p.m.? The weather.
Yep, absolutely. And Paul, it's great to see you again, my friend.
Yes. So the weather, we were just chatting beforehand. It's 30 degrees Celsius here in Melbourne at the moment, which is about 92 Fahrenheit. What's it like over there at the moment?
It's a very balmy 50 degrees here, which is a little warmer than it typically is. But we had a very, very mild winter in New York. I think it only snowed for half of one day. It's been, I think, 3 years since I've stepped on snow in New York City. So it's been a while.
Amazing. So I guess, the story of meeting you is the beneficiary of social media, and you're obviously a very prevalent on all the apps and softwares, your LinkedIn's, your Instagram, Twitter, etc. We sort of got connected about 18 months ago. I started following your stuff after you were posting a little bit more, and we caught up recently when I was traveling to the States in November last year. The landscape of the New York market, it's certainly bigger and a lot on steroids in comparison to Melbourne, but there are some synergies in across our two markets. So what's happening in Manhattan? Can you tell us a little bit about the market you specialize in and sort of what's happening over in the New York City at the moment?
Sure. Well, I've been a broker in New York for 40 years. And for most of that time, I've been a generalist, meaning I sell all kinds of properties, only doing property sales. So there's quite a bit of discipline within my practice in that I only sell buildings, I only represent sellers, I only work on exclusives. It's been narrow from that perspective. But for most of my career, I've sold all property types. More and more over the past few years, I've been gravitating towards doing land and multifamily transactions. So that's most of what I do today. And, the market, like most markets around the world, the market in New York has been having its challenges. And I'll give you the 40,000 foot view. I think really the bull market really started to change very significantly in the first couple of weeks of October of 2015. We sensed that the market was turning. And from October of 15 through February of 2020, the dollar volume of sales had dropped by 56%. The number of properties sold dropped by 54%. Values were down only by about 10 to 12% if you aggregate all property types together. And then COVID comes along in March of 2020, converts this mostly volume correction into a value correction, and values bottomed out in 2020. First week of April of 2021, there's some good news coming out of all the residential brokerage shops. There's in the first quarter of 21, there was upward pressure on residential rents for the first time in years. There was good condo sale absorption. And so we had a break from this terrible market in the second half of 21, first half of 22. But in March of 22, the Fed started to raise interest rates, started to impact the market in September. The market went back into a situation where there was downward pressure being exerted on property values. And because of that, it's been a challenge. And we've seen a couple of major banks fail. There are probably a couple of more on the way. And it's a challenging time. A lot of people had financed their properties with 3.5% debt. Today, if you're refinancing, it's twice that, and the amount of proceeds is smaller. So a lot of folks are trying to figure out what the heck to do. Do you have the extra free capital available to put into a property? If you don't have it, you can't refinance. The writing's on the wall. If you do have it, you have to make a decision. Do I want to put this fresh capital into this asset and hold on to it? So a lot of folks trying to figure out what the heck to do. I will say that there is a little more optimism in the market now than there had been, because the consensus is that if there's any change in rates, that change will be for rates to become lower rather than higher. So that is giving a little bit of optimism to the market. But there's still quite a bit of pain that some owners are going to have to go through in order to come through this. So we've been in it for a while, but I think we're heading out of it. But there's still a lot of challenges that the market's going to go through probably for another year or so.
Very good, very good. So, in terms of peak to trough in the current cycle, how far are we from the peak values in Manhattan for, say, office buildings?
How far are we from the
peak values?
Peak?
Have they declined? Anticipating significant declines?
I think you have to look at each asset class independently. New construction Class A office is doing very, very well. It's really the Class B and C, older, functionally obsolete office buildings that are having their challenges. And what I can tell you is that those buildings were selling for $600, $700, $800, $900 a square foot in some cases, and today they're certainly below 400. Some are even dipping below 300, and these are prices per square foot that we saw 20 years ago. So that market has been probably the most challenged of all markets, mainly because tenant demand is not so strong, and folks are trying to figure out what they could do to make their buildings competitive. And unfortunately, no matter how much money you put into an old building, it's tough to make an older building competitive with new construction, because no matter how much money you put in, it's very tough to change ceiling heights. It's impossible to take columns out. So there's only so much you can do to make an older building competitive with new construction.
Definitely. So are these buildings dropping below land value? Is it feasible to convert to residential, or are they selling it to developers to knock down and rebuild?
Yeah, well, for the most part, and that's a great question, Paul. For the most part, the properties are not selling at low enough prices to make conversion to residential feasible. In some cases, it's happened, but we need some policy help from our legislators. We had in New York a tax abatement program that worked really beautifully downtown. It was around for a few years before 9/11, but after 9/11, it worked fantastically to change the nature of our financial district downtown. We had about 1,800 apartments down there at 9/11. Today, there are about 30,000 apartments down there, most of which were catalyzed by this 421G tax abatement program. The city really needs to implement something like that citywide to encourage the conversion of these older buildings to residential. We desperately need the housing. We have about 100 million square feet of vacant office space in New York. We need less office, more housing. Seems to make a lot of sense. Haven't seen that policy come out of the legislature yet. But in some cases, when values start to get below 300 a foot, even with the cost to demolish the buildings, we're coming in below land value. So I think we'll see a lot of these older buildings either converted or demolished.
Definitely.
Depending on what happens with values as we get further into the year.
Okay, well, there's certainly some synergies with what you're saying, with what is happening in Melbourne's commercial markets at the moment. In terms of the current cycle that we're in, you're correct me if I'm wrong, you've been in the game for over 40 years, with about 42 years.
No, 40 years exactly.
40 years exactly. Okay.
Year 40.
Fantastic. Congratulations. So in terms of the cycles which you've worked in the 1990s, obviously the 9/11 in the early 2000s, the GFC, and now where things stand currently, how does the current cycle compare, in your view, to what you've gone through throughout your career?
Yeah, I think it is, probably rivaling the savings and loan crisis in the early 90s in terms of the stresses in the market. Clearly, each of these corrections have played out a little bit differently. This one's no exception. But I think the massive, massive amount of equity that has been vaporized by this interest rate policy is really remarkable. And all because I think the Federal Reserve misdiagnosed the problem in the market. And so the extent to which they raised rates and how quickly they raised rates, trying to slow the economy down when our economy is only about 20% highly correlated to interest rates, it really disproportionately has had a negative impact on the real estate market, and very, very challenging for folks today who are having mortgages mature where those rates are down in the threes. And very, very challenging to get refinanced today.
Definitely. So over the cycles, you've had the pleasure of working with some high-performing developers. Obviously, New York is the main game, and we look at it over here in awe. What are some characteristics of successful investors and developers that you've worked with over the last 40 years? What have they done that's enabled them to stand the test of time in the changing markets?
Yeah, well, Paul, I always say that in order to buy real estate, you have to have two things. You have to have capital and you have to have courage. And I think folks who have that combination can do some great things, but the market always has been, is, and always will be cyclical, and there are ups and downs. And so, I think there are a lot of folks that have shown that they have wins and they have losses, but the savvy investors have many more wins than they have losses. But when you're in a market that is subject to change and cyclicality, the way our market is, it's hard to avoid those challenging deals, because real estate is not as liquid as a stock. You can't get out of it in a moment's notice.
Definitely.
So the deal cycle is a little bit longer, and you're subject to these fluctuations in market conditions.
Amazing.
So, I've seen so many people invest so wisely, and then you look at other folks who just happen to get in at the right time or out at the right time, and some of it is luck. So, I think if you look at the investors who tend to make the calls more frequently correctly than incorrectly, Sam Zell always comes to mind. He was a great investor, and Equity Office, Equity Residential, two great firms that made some really terrific calls in terms of when to get in, when to get out. But that's a very, very challenging thing. And so you look at folks who have done very well, who have adapted to changing markets, who have decided, hey, you know what, let's just cut bait on this one and go on to the next one. I think people who make decisions quickly, as long as they're thoughtful decisions, better to move quickly and take advantage of a market when you can.
Definitely. So some of the big names that I've seen through some of your case studies which you've posted online, not only have I learnt a little bit from you, and thank you for the referral to Rod Sandomassimo from the Massimo Group. I'm doing a fair bit of work with the team at the moment, and they've certainly elevated my career. In terms of some of the bigger names, you mentioned Sam Zell. I've seen you've done some transactions with Harry Macklowe, I was reading a book, The Billionaire's Row. Are you able to divulge some of the work you've done with Harry and potentially some other?
Sure. Harry, I love telling the story about Harry because when I started in 1984, Harry owned a small one-story building in the area that I covered on East 60th Street. I called him for 2.5 years, leaving messages for him every month for 2.5 years, and he would never take my call. And I called his office one night, about 7 o'clock at night. His assistant had left. He picked up the phone. I said, "Hey, Mr. MacLeod, it's Bob Knakal from Coldwell Banker. I just want to," he said, "I know who you are. You leave messages for me all the time. What do you want?" And, we developed a great relationship. I think I've done 23 or 24 deals with Harry over the years, about $350 million worth of transactions, the largest of which was the sale of his East Side elevated apartment buildings, which was a $179 million transaction that we closed in 2003, I believe. It was when he was buying the equity office portfolio and needed to retire some short-term debt that was part of that transaction. So we did that deal for him. And in fact, one of the deals we did was that very first building that I called him on, that little one-story building on East 60th Street, I ended up selling for him several years later, which was a smaller deal, but they all count. And
Definitely.
Harry has become a friend. We go out socially and still work together. And, I'm very grateful for my relationship with him.
Very good. The Kushner side, there was a case study, I believe you worked with the Kushners. Is that correct?
We've done several transactions where the Kushners were either involved directly or indirectly.
Okay.
But also very, very active real estate family in New York that has done a lot of great things.
Amazing. Well, there's certainly some Australian developers looking, fondly or with a keen eye in Manhattan at the moment. So I'll certainly have to link you after this podcast to some of the groups that are looking over there. In terms of, so we've had a bit of a chat about, your views on the market, some of the people we've dealt with. I forgot to mention, I may have seen on Instagram potentially you were involved in a sale with Mr. Ryan Serhant from the Serhant Group. How was it to deal with Ryan? He had an interesting client.
My wife and I recently sold our apartment, and I'll tell you, my experience with Ryan was very eye-opening. I had the apartment on the market with a broker for about a year. We had a lot of traffic, but no bids.
Okay.
So after a year, I said, I'm going to go with another broker. I interviewed 3 brokers. Ryan was one of them. And I was kind of expecting, here's this big TV personality. Let's see if this is just all smoke and mirrors or there's any substance behind it. I was immediately tremendously impressed with his market knowledge, his no-nonsense attitude. He really gets it. He's fantastic at what he does. He worked with Kayla Lee from his office on our apartment sale. Within 28 days, we were under contract at our price.
Amazing.
And I think Ryan did a fantastic job. Shortly thereafter, we co-listed a couple of buildings on East 62nd Street that could be either commercial or residential use. And so we've partnered up to market that. I've gotten to know Ryan's business very well, extraordinarily capable business, doing great things. He's the first to admit that it's really a media company that also happens to do real estate brokerage. But he's just done fantastic things. I think the world of him. Really, really great businessman, great real estate guy, and I'm glad I got to know him the way I have.
Amazing. So if we take a step back in time, 40 years ago, you just finished at the Wharton Business School. wanted to be Gordon Gekko, tried to get a job at an investment bank, and you ended up at the wrong one. Can you tell us a little bit about that, Bob?
Yeah, sure. I was, freshman year driving around spring break looking for a summer job that would look good on my resume. I'm in northern New Jersey, come out of a Payne Weber office, and across the hall I saw Coldwell Banker. I walked into the place thinking it was a bank. Um, they were the only ones hiring college kids for the summer. Took the job, loved it, went back my next 2 summers, and then started with CB in New York when I got out of school. So just completely by accident. That's why I tell young kids, keep an open mind, expose yourself to a lot of different things, see what's going to resonate with you. And, that was a very, very lucky mistake that I made thinking Coldwell Banker was a bank.
Well, it's stood the test of time. In terms of agency back then in comparison to today, I mean, we're on opposite sides of the planet. We've got an iPad, laptop, with the film crews all here. We're talking. In terms of doing agency back in 40 years ago, you wouldn't have had cell phones. You wouldn't have had computers or desktop computers. How did you do business back then?
Yeah, it seems like it was the dark ages, truthfully. I tell you, 1984, you're absolutely right. No computer, no fax machine, no cell phone. We carried rolls of quarters around in our pockets so that we could make phone calls from the payphone on the corner. It was a different world. Things were moved very, very slowly. And I remember, dictating. It was a great technology to dictate on a little recorder a letter that you wanted your secretary to type up for you, and then you had to make corrections and get it back to her. And oh my God, just really, really archaic. But the interesting thing was that as much as the world has changed in the past 40 years, and it's changed a lot. Um, I think the world is going to change even to a greater degree over the next 5 years based on artificial intelligence and how that is so rapidly changing. But, for the most part, Paul, I'll tell you, I think the business is essentially the same. We have more tools, we have more sophisticated tools today. An individual broker can do a heck of a lot more based on technology. But the fact is that the number of transactions has not increased with the speed at which you can do transactions. It's just the process has become a lot more efficient, and an individual broker can do a heck of a lot more than we could do back in the old days when you had to literally do everything by hand.
So have transactions so they haven't increased? What you were doing a higher volume of number of sales back in in the 80s, 90s than today. Is that what you're saying?
Well, yeah, in the 80s there were more buildings sold in New York than in the 90s, more in the 90s than the 2000s, and more in the early 2000s, the noughts, than in the last decade.
Okay.
And I think that's really interesting to look at that. But I think that it just shows that because the speed of a transaction becomes quicker, it doesn't necessarily mean you have more commerce being done. It's just a more efficient process today.
Okay, so I guess the gentleman who told you off for putting a for sale signboard up on that property that wanted it down so he could buy it quickly, he wouldn't like to do business in the current environment. Can you tell us a bit about that?
He's had to adapt, and I know he's still around.
Amazing.
He's in Florida now, working, investing in real estate. But yeah, I remember we put our first for sale sign up, and had an investor call me, ask questions about it, and said, "Well, I want to see the building, but I want you to take that sign down right away." I was like, "Why?" It's because I don't want everybody to know the building's for sale. I want to buy it. So we knew we were onto something good at that point, and made sure we put signs up on as many buildings as we could. Sent mailings out to the brokerage community, encouraging other brokers to work on our buildings and co-broke with us. And, I think we brought a level of transparency to a business that was very, very opaque at the time. And really interesting to see how it has developed over time.
Definitely. So in terms of If you were a vendor of a property appointing agents, or you just did with Ryan Serhant, in terms of if you were to pick, there's different brands and big agencies and smaller ones and everything in between. What are the most valuable hiring points when you're selecting an agent, if you were selecting an agent to sell a property for you, Bob?
Well, I think, it's an interesting point. I think that you want to look for capability relative to that type of transaction and recent capability. I've sold in my career, I've sold 2,329 buildings. But the ones that I sold 10 years ago and 20 years ago and 30 years ago and even 5 years ago don't really matter that much. What have I sold recently? What am I currently handling? I'd look for a broker that has current assignments that are similar to the assignment that I'm going to give out, because I think they probably are aware of who's active in the market today. I'd look for expertise in that particular class of property and in that location. I'd look for somebody that I like. I think likability is a really important trait.
Definitely.
And I think whether it's a big company, a small company, a mid-sized company, I say there are pros and cons to every situation. Pros and cons to small firms and medium firms and big firms. But it's really the individual that you'll look to. You have a company with 100,000 employees. You don't have 100,000 employees working on that assignment. There's a few people or one primary person that probably is going to be working on it. Maybe it's a team of a few people, but you're going to be interacting only with one or two. So I think it's important the person that you're working with. You feel comfortable with them, know they have the capability, the market knowledge, the expertise, and you like them.
Definitely. So you built a very successful real estate brokerage firm, obviously Massey Knakal. The business was sold to Cushman Wakefield in 2014 for 100 million US, which is nearly double that in Australian dollars. So congratulations. What made Massey Knakal go from a two-man operation into 250 at the peak just when you sold it? How did you dominate? I was looking at some of the statistics. For 13 straight years, you were the dominant agency against the major firms in selling property in the States. There was also a firm that recognised your sales of being 31% greater than the next. How did you do it? How did you go from 2 to 250, and what made Massey Knakal such a successful firm?
Yeah, well, I will tell you that I think the realization that we weren't in the real estate business, but that we were in the information business was a big thing. Our geographic territory model, particularly at a time when publicly available information was very poor, wasn't a lot of it, and what was available was very inaccurate. Working in a geographic territory enabled you to become a neighborhood expert, and so basically we had a neighborhood expert in every neighborhood, and we knew more about the markets than anybody else. We had boots on the ground. After 9/11, a lot of companies were downsizing. We went on a hiring spree. We had 21 employees at 9/11. We started the business in 88 with just the two of us. 2001, we had 21 people. We had confidence that New York was going to come back. Went out, hired 130 people
Wow.
in the 2 years following 9/11. And sure enough, in 2004, the market came roaring back. We had offices open. We opened first in Manhattan, and then 1999 we opened Queens. 2000 we opened Brooklyn. 2001 we opened the Bronx. Those offices were all completely full. And in 2004, when everybody said, "Hey, the market's back. Let's figure out how we can take advantage of this," we already had, you know, uh, dozens and dozens of people in every borough, already with a couple of years under their belt, and we were just way ahead of everybody else. So it was a big
Amazing.
advantage. We took a big risk. It was counterintuitive, But we took a big risk. We're ahead of the curve, and we just focused on information, making our information better than anyone else's, and using that information very effectively to convince people why they should hire us and that they should hire us. We focused on market presence. We were always doing mailings, going to networking events, giving conferences, doing things that made people remember who we were and what we did. And so I think those were some of the things that really helped propel the
Definitely.
firm to the position that it attained.
So in terms of you, so you had 250 staff at the peak. If you utilizing AI and the adoption of digital technology, would you still need a workforce of 250 to achieve what you did at Massey Knakal days, or do you think with AI you could have condensed it down?
Yeah, Paul, I don't think so. I think that today, with a much smaller force, you can appear to be thousands of people. AI is extraordinarily powerful. Not that you would want to do it, but if you wanted to leave 100,000 voice messages for people, all of which are personalized, you could press a button and do that today.
Mm.
So it's really interesting what AI has become, and I think it's going to um, marginalize to some degree the need to be at a big firm, and will empower the smaller firms and particularly the individual to do a lot more and seem to be a lot larger than they really are.
There you go. There you go. It's certainly as a small to medium sized business, it's nice hearing that from you, Bob. It's definitely an attribute which we think is a competitive advantage for Jones Real Estate moving forward. As we sort of were discussing earlier, would love it if you wanted to venture over to Australia at some point and join forces and tackle the Melbourne market together. It's the doorway's always open. So in
I'll
terms of
definitely keep that in mind.
very good. So, I mean, we talked about why Massey Knakal was a success. You know, I'm asking you about yourself here, Bob. You know, if you take yourself out of the equation and you're picturing yourself from above, why have you been, the greatest of all time broker in New York? What are the skills? What are the fundamentals which has enabled you to be so successful? Is it the cold calling? Is it the daily disciplines? Is it core values? What enabled you to sell the most buildings and ultimately be regarded as the best broker in Manhattan history?
Yeah, well, Paul, first of all, thank you for saying that. And I just want to say for the record, I never called myself that. A lot of people do, but I haven't. Look, I think the thing that that is something that has been part of my makeup, my whole life really, is that I always throw myself head first into things, and for me, I think the love of the business, and I've always said that, for brokers to be successful, you really need three things. You need market expertise, you need passion for the business, and you need to be disciplined. And I think the passion thing really comes through for me. I really love the business. It's not only a job for me, but it's also my hobby. I just really love doing it, and I think if you love doing it and you're doing it all the time and you're putting the hours in, that gives you a competitive advantage. I think I use discipline fairly well, and in the instances where I fall a little short on discipline, I have my coach. Rod Santamassimo to instill that added layer of discipline to me. So I think I've tried. If you look at those three characteristics that I mentioned, I've tried to really understand the market from a numbers perspective, and not use adjectives. When, as a broker, the most common question you're going to get is, "How's the market?" 99% of brokers answer with adjectives. I always try to answer with statistics,
Definitely.
and I definitely love the business and have been relatively disciplined for 40 years. I say I get on top of the rock pile every morning, swing away, and try to chip off as much as I can. But that's really what it is. You have to just keep doing the same things. day after day and week after week, month after month, year after year. In my case, decade after decade. But a lot of the things that I do are really the same things that I did 40 years ago. Making my prospecting calls, studying the market, understanding the comps. These are all very basic, fundamental things, but you just have to keep doing them over and over and over again. And if you have the discipline to do that, good things are likely to happen for you.
So what does the daily routine look like for, New York's greatest broker?
Well, I've always been an early riser, so wake up early,
How early?
get to the gym, get my workout in. I get up usually 4:45 to five
Amazing.
o'clock. Try to get into the gym by 5:30. Get my workout in, and then as you know, in the brokerage world, every day is a little different. Someday you might be mostly on the phone. Someday you might be mostly out in meetings. But you just give it your all, and then I typically will go to a networking session. The Monday night is a great night to do this podcast. Monday night is one of the nights that don't typically have a lot of networking events. So I'm home tonight, but try to get my 261 networking events in a year to go see
Amazing.
people. I mean, talking on the phone is great. Sending emails is great. Sending texts is great. Sending hard mail is great, but nothing replaces face-to-face contact with people. So get out and network and meet people. And, those are just some of the things that I've done, fortunately, fairly consistently over the years that have helped significantly.
Fantastic. Final question, Bob. What is, if you're going back over the 40 years, what's been the best deal that you've worked on?
The best deal in terms of what, Paul? That could have a lot of meaning.
I'll let you pick. Could be the biggest. It could be
Okay.
the best capital gain in a short period of time. I'll let you pick.
Yeah, well, I will. I'll answer. You know what? I'll give you a variety of answers. How about that?
Sounds good.
So I would say probably um, the most life-changing deal that I worked on was that Harry Macklow portfolio that I mentioned to you. $179 million transaction, much bigger than anything I had done before. I think it helped people to look at me a little differently. Like I wasn't just the small building guy anymore. And so that was a very pivotal deal from that perspective.
What
I
year
would
was
say
this?
the best deal I've ever done from my client's perspective. Had a client, the Rosenthal and Rosenthal, that foreclosed on a property in the 80s that they had made a $4 million loan on. They foreclosed on it, took title to it. It was in Hudson Yards before Hudson Yards became the Hudson Yards that we know today. We sold that property for them for $238 million. So
Amazing.
they made a $234 million profit on that one.
Fantastic.
So that was a great one. And probably, I've been nominated 7 times for the most ingenious deal of the year by the Real Estate Board of New York. I've won it twice. And one of those transactions was only a very small transaction, but really interesting. A little building we sold for a guy who owned a bookstore on 47th Street between 5th and 6th Avenue, which you may know is the Diamond Block in New York.
I
Just
bought
about
my
every
wedding ring
company
there.
is in the jewelry business. There you go. And it was a very, very interesting transaction, and we implemented some very interesting tactics. There were buyers that we were still using fax machines back in those days, and there were some buyers that were paying off employees in the bookshop to read the faxes as they would come in, so they knew what other people were bidding. Just a crazy thing with people making all kinds of offers with cash and diamonds, cash and gold bars, cash and and, you know, a whole bunch of crazy things. We ended up selling that property for $7.5 million. So it was a relatively small deal, but one of the most fun and intriguing ones to work on. So, you know, if you look at a lot of deals, there's usually a characteristic about them that is really interesting, even if it's just one little aspect of the deal. So I tend to remember them all. I try to share those tidbits with folks on social media in my deal stories because I think you can always learn from those. But gosh, it would be so hard to think back on the one. But I probably the deal that was the most career changing was that MacLeod portfolio deal.
And what year was that, Bob?
2003.
Fantastic. Well, you've certainly had one of the great careers, and I watch, as no doubt others do, with keen eyes for your future plans, and we wish you all the best for the future. No doubt we'll continue to stay in touch. If you're getting inboxed by thousands of Australians, I do apologise for that. People love you over here, and as I said, my place, I've got a spare room. You're more than welcome to come over with your family and spend the night. So thanks a lot for your time today.
Well, don't say that idly. I might show up at your house one day.
More than welcome, more than welcome. Well, thanks a lot for your time, Bob. Really appreciate it. We'll continue to speak, and all the best for the future in the decisions you've got coming up.
Yeah, Paul, it's always great to chat with you, and I appreciate you having me on. And I have to say, the feedback and the DMs and the texts and the emails I've gotten from folks in Australia have been really heartwarming. I really appreciate all the support from over there, and I certainly hope to get there sooner than later.
Very good, Bob. All the best. Speak to you soon.
Take care, Paul. Great to see you.
Thank you.